Hey everybody, welcome to Trading Capital's daily analysis video. Today is currently August 8th, and as we kicked off another trading session, it was an overall down session for the indices. On the S&P 500 today, it did close down 0.43% on the session. The Qs closed down minus 0.85%, and the IWM, the Russell, closed down 0.63%. So it was a broad market sell-off. The only sector that really held up today was healthcare, XLV. So looking at the S&P 500, we've had a pretty decent sell-off from this 459, 460 area, and you can see we've still maintained that bear gap, closing below the key short-term 20-day moving average. Now, what's imperative about this short-term blue moving average, the 20 days, is that every time we've closed below it a couple times here in this little rip-roaring rally, we've had an epic bounce to make new highs. Now, one thing we have to keep in remember, we do have this divergence from the RSI. It's making now lower lows and lower highs in the RSI, but that does not mean we can't get the RSI to bounce along with the S&P. And the S&P theoretically still could take out this high and still make a negative divergence RSI. So I'm actually anticipating a market bounce. Of course, Thursday is going to be the big deciding factor with the CPI numbers. So let's dissect what we think could be transpiring with the CPI on Thursday. So if we look at the 2-year yield, the yields have actually been in a very, very strong uptrend, and they're continuing to maintain that. Just bear with me while no wonder I couldn't find it. I mistyped that. But if we look at the 2-year yield and what has transpired in recent sessions, you can see the 2-year yield is slowly starting to potentially roll over, but it's still in a significant uptrend, more importantly on the weekly chart above all of the key moving average. Now it is pretty extended from the short-term 20-week moving average, but you can see on the daily chart it's now tagging that 50-day moving average. Considering that yields haven't tagged the 50-day really for quite a long time since you broke out of it over here, it leads me to think that we're likely going to see a bounce at least up to the 4.89%, and then maybe we'll see some downside action. But as of now, the Fed fund rate is well above the 2-year yield, and if the 2-year yield starts to roll over, it's the bond market signaling that the Fed may be on a pausing hike or potential cut. And one pattern I'm potentially watching closely is you have this left shoulder, you have this head, you have this right shoulder. If this triggers, it has not triggered yet, but if it does, we're looking at a move down to about, on the 2-year yield, say all the way down to about 4.18, and that should signify a cut in the Fed fund rate perhaps at the next meeting. Now, why would the Fed cut? What could they be seeing potentially that a lot of market participants aren't? Well, maybe it was the export and import data from China that we received this morning or last night, and it came in greatly lower than expected and worse than expected, which could mean that there's more of a deflationary spell on the horizon, hence the reason yields are potentially softening. Even if you look at yields on, say, the 10-year, they've actually made that little new nominal high, almost a potential failed breakout occurring here. You can see you had the breakout, and then you had this bearish engulfing candle on the daily, and you got follow through, closing back below this key trend line. So watching closely for a failed breakout. It doesn't mean it can't reverse and go higher, but if this does turn into a failed breakout, it likely means we're probably going to come test the low end of this range, to call it about 3.7, 3.6 on the charts. Even if you look at the 20-year yield, 20-year yield's actually looking a little bit better, poised to continue to move higher, which is interesting. If you just maintain this trend line over here, that's the level. As long as the 20-year yield holds above this, I think we're going to test the highs. If you get it closed below this 4.32, you're likely going to test the low end of the range, call it about just a pierce of 4% on the 20-year yield. I am holding UBT with a tight stop loss. We are slightly in the money, so that is an inverse leverage play. Basically, it's long, essentially long the TLT, but levered. So full disclosure on that end. But tight stop because yields can still continue higher if inflation expectations certainly get out of hand. Now, what was also interesting today is you had the Dixie, the dollar. The DXY is at a critical point here. Everyone counted the dollar out, had this big flush. Now it's had a big rally, and it's tagging this key resistance level. If we get a daily close above that, probably a good scenario to short emerging markets and go long the dollar. But as long as you maintain below this, emerging markets can actually still trend higher. As soon as you get a daily close above this key neckline, this break, then it basically invalidates this bearish pattern, and you could actually trend all the way up to about 105, maybe even this 106 pivot up here. So pay very, very close attention to the Dixie because it will apply a lot of pressure. And if the Dixie starts to break out, that could also be signifying to the market that inflation is likely going to rear its head again. And we've actually been calling for a lower price action in gold. If you look at the gold market, gold just had a daily bearish close here. Now it is holding some pretty decent support. You have this little impulse breakout move, these little pivots over here. You have this impulse wide range green bar. You have this impulse wide range bearish bar. So there's lots of pivotal action that has occurred in this area. So one daily close isn't going to signify it because we do have inflation data still ahead of us in the next week. And again, if inflation probably falls, gold will probably likely rally if the yields soften up. But if inflation comes back, you're going to see that dollar rally, you're going to see yields rally, and that's not going to be good for the gold market. And even if you look at the GDX, this is a key short that I'm eyeing up because you do have this left shoulder, you have this M top pattern here, right shoulder. You've actually triggered the neckline on the daily chart. Downside target takes you to about $20.72. Whenever you see the miners leading the price action, that to the upside, that is healthy for gold. But if miners start to lead the gold price action to the downside, just like it's positive for it when it's leading it to the upside, it's also negative when it's leading it to the downside. People are basically taking on less risk and not going in the speculative plays that are juiced by the underlying commodity, in this case gold. All right, let's move along. So today we also saw weakness in some mega caps. You had the likes of Nvidia softening up. Basically, for the first time in a long time, Nvidia is closing below the 20 daily moving average. This is putting in a little bit of a bearish RSI divergence. On the weekly chart, you're still super, super overbought. You have been for quite a long time. But look at this beautiful parallel channel that Nvidia has been maintaining for about 4 or 5 weeks now, and it's really going to come down to earnings. I think earnings are going to make or break this stock. But right now, I would favor a little bit of a retest to fill this upper gap, and then I think Nvidia starts its next down leg. But a lot of people are still, I think, shorting Nvidia heading into this earnings report. We all know what happened here, and it certainly was a pretty massive move to the upside. Whether or not it's going to gap up like that again, yet to be seen. But if they come out and raise guidance and beat their earnings, they could certainly push up and make a new high. And on the daily chart of the RSI, it wouldn't be a shocker to see Nvidia have one more final hoorah rally to the upside. Microsoft was weak today. This one's actually coming up into some good support as we speak. You had Tesla down today. That one, I'm actually looking at a long position to potentially go. Meta was weak today. You had some of the other stocks like NEO weak. Let's move along to the energy market. So let's dive right into the energy market. So discussing crude oil, WTI. WTI had an epic sell-off today, and then it reversed and basically almost closed right back at the high. So what that's signifying is there's a lot of underlying strength in the oil market, and that's not going to help with the inflation side of the CPI, especially when you compare the year-over-year numbers. The fact that you're in a year-over-year declining period, but now you're in a year-over-year potential increasing period, it really starts to apply pressure to that headline energy component of the CPI, which is why we've probably seen yields continue to hold its upper boundary range despite pulling back in recent sessions. But the WTI crude basically closing above this key long-term trend line that I've been watching. As long as you stay above that, that is exceptionally bullish for crude. Now, you are getting a little bit stretched on the daily chart. You can see you may be putting in a potential bearish divergence on the RSI with a higher high over here and a lower high over here, and potentially almost making a little bit of a higher high. So watch the bearish divergence. It doesn't mean you can't go higher, but it just means that there might be sellers starting to take hold in this general vicinity. I still think that maybe, depending if we get a softer CPI print where the dollar doesn't spike and yields don't spike, I still think we can see oil push up and then have a little bit of a retrace back down to this key channel of support. So the channel that we were trading in for quite a long time was basically this key channel over here. You can see we actually resistance, then your resistance became your support with a pretty big bounce off that area. So I think we can get a retrace, a tag of this upper boundary range at 84.50, and then at a little bit more of a sell-off, maybe even down to the 200 MA. Let's look at natural gas because that's very, very interesting price action. Full disclosure, we took profits on our Boyle position today. Still holding UNG. I still think Nat Gas goes higher, but you can see you're approaching the upper end of the boundary range. Now, the difference between us approaching this upper boundary range is we have a very, very good shot at breaking out of this range. Why do I say that? Well, I say that because unlike this move that went straight up into the range of resistance with minimal consolidation, look at this move. This move consolidated for multiple weeks, basically held the middle center point of the range, and now is starting to attack that range again. So all of this bullish consolidation has shaken out a lot of the weak hands, and I think that this bull flag pattern or an inverse head and shoulders, however you want to deem it, has a very strong shot to push up to $3.05 very, very quickly in the near term. You're even seeing the stocks like AR push up higher, EQT, so natural gas stocks are also following the charge to the upside. All right, let's move along to the Bitcoin market now. So BTC USD, impressive move in a down market. Bitcoin always seems to have these new divergences. When you're seeing QQQ, the S&P sell off, crypto is getting a pop. So kind of diverging from the overall weakness in the market. You can clearly see it tried breaking through this first resistance. It needs more consolidation, so it seems. As long as you trade underneath this is still bearish. As soon as you get above this neckline, then I'm watching for a strong close back above this neckline break. Believe it or not, I'm actually leaning more positive on the Bitcoin side. This weekly flag pattern is shaping up nicely, and it actually could push you up to the 33,000, just a pierce of 33,000 in one last hoorah rally for Bitcoin. If Bitcoin gets going, obviously you're going to see the likes of Coinbase, Mara, MicroStrategy. Coinbase has a nice weekly pattern that is holding up very, very well. This I'm actually looking at on the long side. Believe it or not, I do have an inverse head and shoulders pattern that takes you up to a potential move of 138 on the charts for coins. So full disclosure, I'm not long, but I'm eyeing it up very, very closely. I prefer to get the inflation reading out of the way before I take a potential position on the long side in coin. So there's going to be a lot of interesting opportunities as we progress through this market. Just be mindful that small caps have been on a massive tear lately. You know, you look at Upstart. Upstart had this rip-roaring rally, hard sell-off, big bounce today, and then it's gapping down on earnings, trading at all the way at 41.07. I actually do like Upstart tomorrow for potential bounce play. I would love to see it flush below 40, even 39.40 level before I go long. But pay attention to Upstart because with that big of a gap down, we saw what happened with the gap down today. It got bought right back up. Now, if we gap down again, will the same gap be filled to the upside? The question remains, but that's certainly a strong likelihood, especially if small caps get running to the upside. One of my favorite positions is MMAT. Let me just pull that up on the chart. Just bear with me for a quick second. Just got to scroll through my list. Actually, before we discuss MMAT, metamaterials, take a look at this short opportunity on Berkshire Hathaway. So Berkshire Hathaway has basically made a new all-time high, hitting this double top in a very extended state. And this is more of a weekly extension pattern. So you can clearly see breaching that double top all-time high, very overbought on the RSI. On the weekly chart, you can see the parabolic nature even more. That is a opportunity that I just pulled the short on. And there's even another trend line that you can arguably say we tagged today. You can clearly see this is basically your pivot, 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 kissed it, bearish breakdown, gap down lower, another resistance point reversal, another resistance point reversal, and you're tagging that double top. So there's a few factors here. You're extended on the weekly, you're overbought on the weekly, you're into a double top, you're hitting a long-term resistance COVID trend line. Now, Berkshire Hathaway being at the all-time highs just shows you how strong the market has been. But needless to say, I do think that all things do start to see a pullback given this extended nature of BRKB. So I am, full disclosure, shorting Berkshire Hathaway in anticipation that we see more downside. Now, it was interesting to see some of the small caps that I have. This chart I absolutely love on metamaterials. MMAT, full disclosure, I am long. Taken 17% profit with members on the first half of the position and riding the rest higher. I think we can get to this gap fill, which would imply basically from the current level of 44% jump. Now, my long entry is sitting all the way at 22.36, so I'm deep in the money. But look at this potential basing formation. You've had your breakout, you've put in this bullish consolidation, and two standout things is you've had your earnings, good earnings, and it's started to trend higher from earnings report. And secondly, the market was weak today, and this was negative, and then it gained and went positive in a weak tape. So whenever you have the stocks that start to outperform up 4.28% in a weak market, those are the ones you want to pay close attention to, because if the market gets a pop, which I think we're due for, then you could see a little bit of a squeeze to the upside. Even if you look at the cannabis names, Canopy Growth, full disclosure, I am long with members, nicely in the money. On an hourly chart, you had a breakout of this flag pattern. You can see your down sloping trend line, breakout on the hourly chart, 1, 2, 3, 4, 5, 6 hours of consolidation. This one looks poised to actually be a sympathy play and charge much higher. I think we can get a quick move to 65 cents, even based off of its sympathy play Tilray having a whopping over 30% move. So interesting to see some of the marijuana stocks starting to perk back up. Maybe it's some election cycle rumors and political chatter that's going to come into play, or simply just extreme oversold names in the cannabis sector. So on that note, I'm going to end this video here. Please give this video a big like down below. If you're interested in trading services, definitely take a look at our website at tradingcapital.ca, and please stay tuned.